Good morning, guys. It's been a long few days. I seem to have uncovered something yesterday, and I was in a rush to try to hurry to put it all out in one concise form. That way, when I do this video, that it's all about just the data. Because I didn't know much at the beginning of this year. I've been hodling a long time, guys. I eat red crayons for fucking breakfast because they made me. So with that said, let's begin. There's proof. I love you guys. So there was something about the Victoria's Secret tweet that just didn't sit right with me. I couldn't figure out. It didn't make sense, and something had just a seed had started in my head that Cohen was trying to show something. There's been certain companies he tweeted about over time, and I was like, that's strange. There's a pattern. I'm really good at seeing patterns. So when we looked up to Victoria's Secret, and this is what I was trying to show. This is L Brands. What this led me into was an idea, and this was a couple days ago, of trying to figure out exactly what was going on here. Why would this man want us to look into Victoria's Secret? Why would anyone want us to look into Victoria's Secret? And there's certain things going on in the funds that didn't make sense. We can see their positioning below, and it was a couple of us that noticed this, and it was really intriguing because to sort things by return percentages, you can see that there are a few of these that the cost bases don't line up. Value change, these guys are absorbent. But the return percent, what? 180,000 point. This doesn't make sense. And I've tried to bring up that. And when we looked into Tailored Brands, this was a rabbit hole because we couldn't find all of their filings. So begin a few days of the community diving in on the Tailored Brands and Les Wexner and making all the funny connections that I wasn't even trying to dig up. It became apparent that something is very wrong here. And you're going to have to bear with me. I'm not trying to make this short. I am trying to explain my thought process openly, clearly. So buckle up. Average share 30.9 thousand at a value of 20 million. The cost basis negative 976 million at a return of negative 95%. And who's behind it? Okay, so we have D&B Asset Management and Simplex Trading is holding the puts and calls. But the problem is that this underlying is a $70 stock and below. And we can see that as I come over to the chart. We can look at the high here. Is the most they ever reached was a $100 share price. That's visible. That happened between 15 and 16. Really weird. It didn't add up. And even then, between 15 and 16, that's when all the puts started. Doesn't make sense. When it really comes down to it, I just kind of showed this and then went on my way. And then a couple days later, I went, wait, well, if that's true, then maybe ice cream doesn't mean ice cream. If ice cream means McDonald's, then what does frog mean? And we had to go and look up the definition of frog, and I put that in the frog ice cream DD. So when we looked up McDonald's, we'll go ahead and just pull up the chart first. They had a maximum of $240 value this year, which is good. You can see McDonald's has really done pretty good as a company. Like if I would have got in here, Autist all day, green crayons, living life. And it all of it together, I'm trying to show you a series of patterns that will go across 6 stocks. And so I need you to just sit back and I'm going to compare a coincidence with a coincidence with a coincidence with a coincidence. And 2 coincidences are not a coincidence. They become a pattern. And it became very evident, the pattern that I was noticing, very fast. Notice these names. That's important. And I'm not diving into them. They are not the fucking focus here. I'm going to come over here. Are you going to load, stupid? There it goes. And I'll just go straight to average share price. And you got to forgive me. I have a lot of tabs open. I guess I could close that one. I'm a normal person, guys. I'm no one special. I'm just somebody who... I'm here with you. As soon as this thing wants to load. Okay. Much better. You guys have to bear with me because I'm just going to take my time and show you. $100. No. McDonald's reached a max of $2.40. Yet these individuals have average share prices of $112,000. We go all the way down to $1,000 per put. These guys paid $10,000 per put. These guys paid $21,000 per put. And these gentlemen, Alfred, Capital, DMB, Asset Management, BNP Paribas, excuse me, I said it wrong. There's certain funds that just seem to, look, they just took that whole thing and negative, 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 negative. Okay, well, let's look at the return percentages on this fund to see what the maximum is. And like I said, you got to bear with me. A lot of tabs open. I'm probably more patient than you guys. There we go. And I don't care how long this takes. I'll wait here with you guys. We have 120,000% return, 109,000% return, 105,000% return. Man, I wish these guys would seriously invest with me. You know, can they help me out like that? Here's the position. Schroeder, MetLife, Massachusetts. Interesting. But the average share price, you know, when we went back a moment ago, that was DMB. That's a common thread here. These are exorbitant amount of returns. That's DD number 2. So let's see if we that's a coincidence. All right, so let's see if we can line up a third coincidence. And then I realized, you know, there were other things that were pointed out, and it all ties into the definition of frog. So once again, I'm just going to give you all the information that was in my DD in front of you. We had a high of what, 52? Is that why it stops there? Probably. That's recent. Now look at this put spread. This put spread seems interesting. Did they have to suppress the price? I don't know. I don't know enough. I'm an idiot. That's why I bring everything to you guys, because together we can see patterns and we can see certain things that shouldn't exist. Let's go to average share price. And you guys have to bear with me. I guess I can close out previous tabs, try to make my browser a little faster as we go. So first thing I see is Formidable Asset Management paid $480,000 for 2 shares. And that's average share price. So they actually paid $960,000 for the 2 shares. And we look at their cost basis, it was negative $30 billion for $30 billion profit at a return of 1,411,560%. Man, I wish, you know, I only own GameStop, I'll be honest with that, but I still wish that they would, you know, these guys should run my portfolio. I would love to see 1.4 million % return from those guys filed here. So, you know, that's interesting. 3 out of 3. Oh, okay, so now we have 2 coincidences. And you know what that makes? A pattern. Add the next coincidence. You guys know these guys. Oh man, Blockbuster? Blockbuster was fucking cool. I remember going there for movies and things. It was lit. So let's look. Share price. 0.046 according to this chart. Okay, I've never even heard of that. That's stupid. Let's look at them. Oh, it and Chevrolet. So let's open both of these out of sheer curiosity to see if there's anything funny with the only 2 positions on this closed company. So I'm going to go over to Chev. We can see that they did pretty good for themselves this year. You know, they're increasing portfolio size. That's cool. And then when we come over here, it's easy to see that on certain things, we'll go to average share price. And I'll do this to every fund. That's a normal price for Berkshire. Did Amazon ever reach 3 grand? Did Google reach 1900? I don't know. Let's look at their return percents to see if they did anything exorbitant. Because this could be a normal company. You know, that seems pretty normal. So I'm going to say that that's a normal investor. Let's go over to their other one. It's average share price. And this is just the way I think. We can see that they also like Berkshire. Got in at a different ticket. They paid $400,000 for one share. The rest of these look pretty normal. Let's go to their returns to see if anything's funny. And I believe these were the ones. Yeah, see immediately 1,681% return on that investment. What company is that for? Namtai Property. I don't know what the hell that is. And Mercer International Incorporation. So they had 1,151% return. Cost basis, negative 2.7 billion, and they profited 2.7 billion. This cost them 1.1 billion and gave them almost 2 billion. Those are good choices, right? Look, they put their whole portfolio there. Bless their little souls. Oh man, should we look at them? Let's go ahead and look at them. Do you want to see their positioning only in this fund? We'll click that arrow. And this will show us their positioning strictly in Blockbuster. Oh look, share price $34. So they got in when it was good. Doesn't make sense, the share price. And when we come over here, we can see that average share price shot from $9 to $206. Interesting. That's interesting. What's their return percent? Oh, that's where their returns came from. Okay, the most recent filing of these guys. And if you want to look it up, you can come over here. The file date is on 6/31. That's their effective filing. And when it actually came into effect was 2 months later. That's valid. Okay. Interesting. So I'm going to back out of this guy and I'll go back to BlackBerry. Or Blockbuster, excuse me very much. Sorry, BlackBerry. I'm going to ignore that. I'm going to the next one. You know, I'm noticing a pattern that each tweet seemed to focus on a company that had some funny stuff going on. So let's go overhead and let's look at this Sears chart. I find this interesting because these guys really liked to be part of here until it went down. And then for some reason, this thing just exorbitantly climbed in value. Sears? Didn't Sears? It's going under, right? I don't understand. We all like Sears. They made shitty tools and we could go there for socks. And I like socks. I don't give a shit. We can see that it was shorted to death through puts. I don't know who they belong to until we look. And they had a decent amount of call options. So people wanted to position and other people wanted to position. And then no one's here to increase. It's interesting. I wonder who is here to increase. Is this who's left? Damn. And even at that, there's nothing really here to look at. I didn't dive too deep. All I did was exactly see this company, that when you look through their portfolio, they seem to be all over the place with 0 shares, 0 value. This was on the last DD I did. That got really real, really fast. But let's just look at Silvercrest Asset Management Group from a few minutes ago of their position here. We can see that everybody got in May. So let's just look at them. And let's see what they did in Sears. You know, this looks like they really liked the stock and didn't, and did, and didn't, and did, and didn't, and did, and didn't. And I wonder who they are switching those to. Didn't make any sense. And we can go through in time and look at their, I like the return percents. Honestly, I always look at these first because it shows me how profitable or how losing the company was over time according to their 13 Fs, which is essentially just a filing of positions and a change in their underlying price. And we can see that it climbs. Oh no, it doesn't climb. It does the opposite of climbing. It goes straight to shit over time, which is weird because no matter what, as it went to shit, these guys like to hold their position all the way to the deathbed, even though it went from $54, and that was in 13, down to a quarter. And that's this year, which is interesting, you know? So we have a pattern. This is a pattern. These aren't coincidences. These are a pattern. Let's look what IFP did with this portfolio. Oh, that's interesting. Once again, they had it, lost it, had it, lost it, had it, lost it, had it, lost it. Are they switching the shares back and forth? Are they I don't understand. I mean, and even that, to get fully invested the way they did and then exit, I'm not sure. I'm just not sure. And we can see that they had normal stock coming over here, 2% returns. Let's just look at what they did. Okay, so they got in at a loss, made a good bit, got a loss, made a lot of bit, had a loss, fucking killed it, had a loss, killed it, come over here, had a loss, they killed it, had a loss, and then killed it, had a loss, killed it. And I'm just trying to show you boys the patterns is all. Because that's not normal growth. That is not normal investing patterns. It's just not. So let's ignore them. And this right here was for Sears. I actually liked Sears. I had family work for them when I was younger. They had a really good company, little benefits package for those that worked hard. I liked them. And there's just so much here. So now that I've been through those, there's certain funds that you can see according to my DDs that, I'm good at noticing the patterns. And what I noticed is that D&B Asset Management, through all of those, had exorbitant rates of return. Astronomical. 200,000% is a valid return for any investment company? Damn, son. So I'm going to bring you guys back to why this is all an issue. And this is very important to all of us, any of us that have been here for the entire time. Because I'm going to show you through these patterns, through these 7 coincidences, that it's not a coincidence. I'll light my cigarette. Now, the fact is, I didn't know shit, and I just had an idea, and behind my idea, I noticed the patterns. And here we can see institutional ownership in GameStop. I'll start with this. They've been here since 2013. Makes sense. They come all the way over here. This is institutional ownership. You can see on January 27, 2021, where we went up. Right? That's important. The time frame here. Since then, institutional ownership has floored, except for BlackRock's repositioning of 9.2 million shares on the board. That's not on the chart. I know because I went through them. So when we look at ownership, not ownership, ownership, not ownership, ownership, not ownership, this bar should be solid if they held those shares the entirety of time. Now let's go ahead and look at their puts. And this is, the call options are in green, the put options are in red. You can see negative values, good values, and we can see our actual underlying price. This is what blows me away. I wish that anywhere in here to here I would have known, because I like the stock myself. This is the only thing I own. I can say it that way. And I went through all of the corporate bonds, the treasury bonds. I was trying to figure out how to be a bear when I did the L bond video. I don't know how to be a bear. I don't know how to be a bull. I had to learn how to invest this year, right? So even down to stock patterns of have, don't, have, don't, have, don't. This is weird because somehow people were opening the positions and shucking them and then profiting. And we can see that our max price, according to these assholes, was $350. But I saw it go to $500 that day. I was there watching it. We all got excited. And so when we look at the institutional investors in GameStop, we can see very easily the dates that they got in and how long they've been there. BlackRock had left, but we can see that they still have 9.2 million shares. And this is simple. Change in percentage. These guys got out. These guys got out. These guys got out. So who are they? With 0 shares? That would be Must Asset Management, FMR LLC, and Donald Foss. And it was interesting. When I went, knowing what I know now, I just went directly to GameStop, and I wanted to change this. I wanted to load this by percent return on our beloved stock. And the first thing I noticed was the exact same bullshit. 97,811% profit on a negative cost basis that paid billions, millions, millions, thousands. But these guys made 49,000% in interest return, 14,000% return, 4,000, 3,000. This is believable because GameStop, it rose. Like this is real. I believe in that. Negative cost basis for a profit of almost 2,000%. We have a negative cost basis for a profit at almost 1,700%. And so there's patterns here. Now I would like to present to you the idea that when we go to the top of this, who do we see? At an average share price of $107,000. Is that where we are at? Is that what the real number is? I don't know. I can't tell you. But I know that the puts cost them 104 each. The cost basis was 131 million, and somehow the profit was 110 million, but they made a return percent of almost $50,000 or 50,000%. That doesn't add up to me. Doesn't add up. That's Prelude Capital, Pixie's, and BNP Paribas. So let's sort this by average share price. And I guess I could have closed all the other windows so this works just a little faster than normal. So we have very secure things going on here. Right here you can see that they are paying on an average share price for a GameStop share $107,000. For the call they paid $21,400. For the puts, and this is Clear Street, they paid $20,198. And over here, $20,178 for those puts. These guys paid $941 for those calls and these puts. Damn, is that where our prices are? That's CTC, Simplex, Clear Street, but BNP Paribas arbitrage. Those guys, that's off the hook. That's a good return. How do we get 97,811% return on GameStop while only paying $740 million to get $4.8 billion? How do I do that? Maybe we can look at what they did. Okay, so even at that, man, they had great positioning over time. These guys have been here a long time, and we can study the charts. For some reason in 18, they really increased their position just to get rid of it again. But if they like the stock so much, why would this stock pattern just go boof? I don't know. That's strange. Let's just look at their actual portfolio values. So immediately we can see on the most recent filing by BNP Paribas, they paid equity. I don't even know what equity class is. That's how retarded I am. We can see that they had stock at one point, but then they switched to equity. Probably because there's no stock to buy when we look at 2017 plus. Who knows? What were their profits? Eating shit. These suck. Eating shit. 20%? I even like 22%. But to see a 200%, followed by a 63%, followed by a 731%, followed by 97,811% return, that's kind of funny to me. That's kind of funny. And so they paid $107,000 per share. All right. Damn, son. So I got curious. Is DNB in here? Nope. Is Heritage an investor on GameStop? Yeah, Heritage Wealth Advisors. So let's pull up their involvement in the stock. Oh, okay. We can see that they majorly positioned themselves sometime around the beginning of the year. They exited at a low, you can tell by the stock chart, and then they seem to want to get back in. And that's interesting. So they saw something. They could have liked the stock. And when we look, it's really simple. The average share price shows 198 for 630. So let's go back to GameStop. Damn, what's the prices here? Going all the way up. And what's the time frames on these guys' investments? 1 month later? Oh, so the guys before this, right? 630, they were paying 200 a share. But you come over here to Simplex on the 4th, and they were paying $900 per call, boys. Damn. So that means we should have been there. right? In April. So is that because of margin? I don't know. I couldn't tell you. But I know that when we come over here, this isn't a derivative play because it would tell you call or put in the options play. If there's no listing in the options play right here, then that's not an option. So when we come over to their date, August 10th, they paid $107,164 per share. Damn, son. Now I got really curious here because I noticed patterns about which institutional investors were sitting in which of these companies that all seem to go really south for no fucking reason. Because any of them can just close their doors and slow down. So what I did was opened up each of the investors' portfolios. And I sorted these by a certain thing. And I opened up all of them. This is really simple. You can see, and I'll start with the guy that I like the most, this gentleman. I fucking believe in this guy with the entirety of what I am. I like the stock. We can see that this is all that he has. How do you know? I'm going to click on RC Ventures. Oh, wait, insider profile. There's nothing else there. He owns GameStop. Insider purchases. He's only ever owned GameStop. That part. Price at max. He paid $347. Fucking savage. Did he get rid of anything? He's never sold. Damn, me neither. I never fucking sold. I'll never sell. So when I went through these, and I'll show you the ones that I think are honest first. Permit Capital, although they increased their position over time, I could not find DNB or Heritage on their portfolios, and I couldn't find any funny underlying prices or any underlying return percentages funny. So I like Permit Capital according to what I'm finding. So I'll go to the next one. I don't even know how to say this. Signvest? I'm not sure. But we can see that they fucking like the stock. Doof, doof, doof. That's kind of like what my positioning with GameStop looks like. I like the stock. They want to give me free government money. I threw that shit at it wholeheartedly. We can see that, there's no funnies. I do a search for DNB, trying to find the patterns, and then Heritage. Those aren't there. So let me just close those funds, assuming, because I'm just looking for a thing. When we look at their positionings, Must Asset Company, we can say they got in from November to December and held it. And that was at a share price of $140 per share. And then February to March, they got in and for some reason exited. And that was for a certain other price. GameStop, Kalimura, I don't know what these are. I don't even care. What I care about is when I come down here, shares. Let me look through average share price. Those don't look crazy. Let me go to their return percentages. 50% is actually a really good play. 50% is a good play. That's an excellent play. I actually like this investment company based on the numbers. These look valid. These look valid. So whatever, I'm going to skip them. I'm only looking for patterns. And then the next one, we'll go to Maverick Capital, boys. So let's go ahead and just do some financials. This isn't fundamentals. Deep fucking Value did the fundamentals, and the fundamentals only got better. Ryan Cohen has taken this company. He has cleared his debt. He has created an amazing board to revolutionize whatever it is that he's trying to do. I believe in the company more than I'll believe for all you guys. Like I'll be your hype man. Don't even trip. But this isn't about that. This is about I'm looking for the patterns. DNB, are you on there? No. Heritage? Heritage not on here. Okay, so I'm looking for the funds that through the DDs that I sent you on those other ones. That's all I'm really trying to find is can I find a pattern with who they had? Here's Susquehanna Securities, right? We know them. Susquehanna's really, really loud. They're famous. And it's interesting to me. These are all their institutional holdings. I mean, they've eaten shit as a whole on everything they're touching except for Riot Blockchain. Period. So, I didn't notice this yesterday. I'll just do you guys a favor and I'll look up Riot Blockchain because I don't know shit about this. We have an institutional value of 1.2 million. That's actually kind of cool. What I think is a little crazy is they have 22 million shares. but the outstanding shares is that's kind of crazy. So let's look. Riot Blockchain, institutional ownership. There's something going on in Riot Blockchain since the beginning of the squeeze at the beginning of the year to where we are now. And I bet if we look at that chart, it goes up, goes down, goes up. And I find it interesting that they find a way to position themselves at the low end repeatedly. Okay, I'm going to ignore that. I don't even know what Riot Blockchain is. I'm just doing financials for you boys. And we can see the only person that owns this is Northern Data. So let's be a nerd. Riot Blockchain. So Northern Data is the only ones in Riot Blockchain. And in case you guys don't know, I'll show you how to do this real quick. Schedule 13D is essentially when somebody wants to show ownership because they position themselves. And we can see that they have common stock. That's the company number and the date of the filing. And when you go through these, it'll tell you exactly which one this is, a 13D1C. And we can go through this. The Schedule 13D says that Northern Data is registered in Germany with a voting power of 11.8 shares. And we can go through. They have 12.3% of the class. And that's the basis of the filing. You have their address. And we can go through. We can see how they're filed. And this is essentially how to go through a 13G. It's going to show you essentially who bought it and who's doing the paperwork. So the CEO is this guy. I can't even say the name. I'm not going to disrespect him by trying. And this is all that I did. That's it. So do you want to see their actual positionings into the fund? We click this button and we can see exactly where they positioned. So on March 27th, they hopped in the game. Or May, excuse me. And so I'll just back off them. And then Susquehanna Securities, we can see their specific investments. We can see 2018, 2019, and 2021. So that's interesting. Susquehanna is the only investor in Riot Blockchain except for the CEO. And you know, I don't really know that this chart, the way that it's not solid ownership increasing in time, that these are switching out, I feel like that there's something funny to look at the Riot Blockchain. And it connects to Susquehanna. Beyond that, I can't find anything negative in their portfolio except for all of their returns. And that's weird. Why would all of these cost and then that one's good? I'm not going through Susquehanna. So let's go back. Next, credit. Let me start at the beginning of the ones that don't make sense. So this right here, all the way up for you boys. This is Dimensional Fund Advisors. They've been in GameStop since, I'll give you dates, February. And the only ones that were in here before, right? We have BlackRock that positioned the day before the squeeze. We have Ryan Cohen who was here, and Permit Capital. But I think, yeah, Permit Capital still has a positioning of 3.1 million shares. So, I mean, they are up there. I did go through them. I couldn't find anything funny. But Cohen Ventures, they've been here since January. That's when God bless his soul. I hope you stay safe, friend. And we can see exactly who got in before, who got in directly after, and who hopped in, strangely enough, afterwards. So ignore that. We'll just go to Dimensional, and I'll start to do the financials the same fucking way. So according to that chart, Dimensional got in way back when. They own it, don't own it, don't own it, don't own it, don't. And that's a weird stock pattern, because if they liked the stock, they would have held it the entirety of time. Now we can come down here, and what I was wanting to look, my pattern I'm looking for, let me see DNB. Okay, so we have DNB's positioning in an institutional investor's portfolio that is also a placement into GameStop. And we can look at Bradstreet's positioning into this fund. And that's real interesting that they like it, and they seem to know the moment that it sucks, and then they like it again. Huh. So Dimensional Fund Advisors, for some reason, after they exit, DNB goes to shit. Neat. So let's look at their percent returns. Those are all normal. All their prices seem normal. That's fluid growth, and then it just takes a giant shit over here. So I don't know what happened here. I don't even care. I'm just showing that DNB is present on one of the institutional investors' positions. Neat. So let's look for Heritage. Is there a pattern? Okay, so we have Heritage Insurance Holdings. We have Heritage Commerce Course at a negative 20% portfolio almost. Heritage Financial Corporation with a negative 23% holding. Heritage Financial Corp with a 20% up. Heritage Commerce Corp. Damn, so DNB and Heritage are both here, and they seem to like Heritage. So, whatever. Insurance Holdings. Ooh, now you're curious. Because, you know, I'm curious on all these insurance things going on. We can see that over time they've increased positions. Nope. I'm not seeing any, and this is what I'm looking for. I'm not seeing any really strange plays on their positionings. These don't look too ugly. These look normal. The cost basis is for a negative. Nothing too special here. And their share prices seem very fluid, organic, and normal because they're very related to each other on every. So, you know, maybe that's not a filthy fund. And this is the way that I've worked this entire time. This is how I go through a filing. Is I'll go through major amounts of positionings on a company like I'm doing with GameStop, and I'm just looking for any patterns. So State Street, right? Let's look up State Street. You guys know State Street. They're huge. Portfolio value, 1.7 trillion. Is that trillion? How many zeros is that? Thousands, millions, billions, trillions. They're almost 2 trillion. Geez, you guys are successful. We can see that their portfolio has slowly crawled and increased over time. This makes sense. They've actually doubled their value in how long? So here they were at 800,000. That took them 4 to 5 years to. That's not even thousands, dog. Damn. Okay, I get it. So they did good, is my point. And when we come here, all I was looking for was the patterns. Is DNB in this portfolio? DNB is on a second institutional investor portfolio. So let's go ahead and look at their positioning from State Street. And what I'm going to look for is a similar pattern. So State Street invested into DNB until DNB was going to go to shit. And if you time this up here, that sure seems to be really similar to the other one that we just saw. From what? Dimensional? That was dimensional. And here, I guess I'll just bring it up. I'll just leave it up. Because I would like to teach you guys, one, how to go through these and understand what I'm showing. And B, I would like to show you the exact mechanics of how the institutional investors are using the profits from these different funds to be what suppresses GameStop. And I'd like to plant that seed. Because that is what this is about. Is when we look through these, and I look at Vanguard, and we see once again that they, in July 13th, were worth what? Millions? I don't even know what that means. They 5 times their portfolio value by the end, and most initial one isn't there, so we'll just say 3.5 times. That's an incredible growth over 5 years. It really is. And so ignoring all that, let's just go to search, buddy. DNB. Is there a pattern here? Damn. So that is what? 1, 2, 3 institutional investors that share a common underlying. Now, before I go farther, is Heritage in this? Heritage is here. Okay. So we do have patterns. We can see, and I'll just zoom in on the names so you guys can just understand. Heritage Financial Corp, Heritage Commerce Corp, Crystal Clean, Insurance Holdings, Global. Yeah, I'm noticing a pattern here. And all I was trying to show everybody is that why is it that the institutional investors on GameStop, right? Why is it they all share this one fund? Now I'm going to ignore myself. I'm just going to go to the next one. FMR. Okay. And I could pull up FMR's. Actually, I'll probably do that directly after this just to finish it up. 1.1 trillion portfolio. They did good. We can see over the 5 year, they've essentially doubled their value. No, not quite. Not quite doubled.
You don't have the dogs?
So when we come over here, the change percentage, let me go ahead and do a search for DNB and see if it's present. And that's funny, it's right there. So let me go ahead and do a search for Heritage. Yep, so we got a common pattern here. And I have a perspective that says 2 coincidences aren't a coincidence. 3 coincidences? Ah, it's not a coincidence. At that point, we are now designing a pattern, commonalities between things. So let's go ahead and look up DNB again and look up FMR's positioning into DNB. Come on, bring it up, baby. Think, baby. There we go. So let's look up their positioning. I hope you guys are being patient. I'm trying my best to explain the way I think and what I found. And I love you guys, so I don't care. If it takes me 8 hours to explain this, find me in the Discords while I'm still here. We can come over here and look at their positioning into DNB. And once again, the time frames here, we're seeing patterns on the institutional investorship into Dun & Bradstreet Corp. Over here, they got out at the same time and repositioned at the same time, which is weird. Weird. I don't like patterns in the market, not when we're doing this. So let's look at any of this. Average share price, we can see that it's organic for the most part, but you know, stayed solid, and then something about them got really shitty over time. One sec, I'm gonna go grab a cigarette. That's funny. It's interesting to bring up to everybody these things and then go, you didn't explain anything. This isn't gonna work. And it's really interesting for me to say, you know, according to the fundamentals that never changed and only got better from the only underlying that is really owned by retail in a situation that we can't be pushed out of the float, that this is a little bit different. The one underlying that I like so much that it is all that I own is a little different than every other underlying on the market. And that's neat. But the patterns here, that's not neat. There we go. So I'll continue. And that's FMN into DNB. So let's just go to DNB. Well, hold on before I do that, because I am not done going through the institutional investors for GameStop. I apologize. I'm jumping ahead of myself. Here's BlackRock, right? And I'm going to go, I don't even want to go. I'm just going to go into BlackRock's position into DNB. We can see that previous shares, they took a fat ass position here. Change in ownership, negative 48,000. And that's because they had jumped in, were in, and jumped out. What's the dates here? February. Huh, that's right after they got into GameStop. That's a pattern. Okay, so let's come over here. Is Heritage on the BlackRock portfolio? Yes. Heritage Commerce Corp, Heritage Insurance Holdings, Heritage Financial Corporation, Heritage Commerce Corporation, Heritage Crystal Clean Incorporated, Heritage Financial Corp. One more, Heritage Insurance Holdings. And that's neat. Okay, so we have patterns. Go all the way back up. Now, let's do, did I do the CACC for you guys? Nope, because that ties to this gentleman. And he's on the board of Investorship. Donald Foss. I got to this page by clicking his name. We can see that the only two things that he had GameStop. He got out of GameStop after BlackRock got in. That's, you know, after the institutional investors, and we'll put a time frame to this. We'll be a nerd. 13/2/12. So he had shares, and now he doesn't. Negative 100%. But that was on 2/12. And that's, you know, when we look at who owns DNB, these guys were positioned, these guys were positioned, these guys are positioned, these guys are positioned, and it's real funny. These guys are positioned, and the other ones, these don't have the positions of DNB or Heritage, but State Street, Vanguard, FMR, BlackRock do. that part. I don't like patterns, boys. So let's go back to Foss Donald. And I got curious if that's all he owns, because Ryan Cohen, excuse me, Ryan Cohen, Michael Burry, when I went through his Scion portfolio, it was real similar. Um, Here, I guess I'll do it. Nope, nope, I don't want to jump ahead. I'll show you that, and that's how I'll finish this. Let's open up Credit Acceptance Corp. That's what I did over here, and I was curious about this gentleman's company. What about these guys? And what I noticed is there's Vanguard Group. Okay, we have an annuity trust in his name. So let's look at his annuity trust. That's interesting. So Donald Foss owns some things, and they are only into the Credit Acceptance Corp. Okay, I actually like that. This guy has one company into him, and that makes sense to me. I'm going to invest in my own company and create an annuity trust. That makes sense. Now let's look through this portfolio and do the same thing. How did you do for yourself, Daniel Foss? Oh, look, 124,000% return again, guys. What? And then 1,000% return? How do you get 124,000% return when you have a negative 16 million cost basis that pays you $1.2 billion? Average share price, 227 grand. Oh, look, BNP Paribas again. Huh. That's curious. Let's go to them. And we'll look, BNP Paribas, we can see their portfolio went down. I'm not even going to bother with that. Let's look at what their best returns were. Because these numbers, I'm not good at counting. I'm just not. But do you see the return percentages? 47 million% return, 25 million% return, 11.9 million% return. I'm going to sort this for you guys. My computer's being a little stupid, so forgive me and be patient, because this is more important than you just giving up. Explain to me, please, how these numbers are possible. Period. 1 million+ % returns on this many portfolio holdings? This is amazing to me. This is a hell of a fund manager. I would like him. It would be nice. I don't even know how many of these there are, guys. Do you see all of this percentage returns? I would really like to know how this is possible, because that, doesn't make sense. Let's ignore that. I'm going to go all the way back up. BNP Paribas. BNP? Do you got DNB? Nope. Do you have Heritage? Yeah. Oh, BNP is invested in Heritage. How much did you make off of Heritage, sir? At 12.5 thousand per share. This cost them negative 23 million to make 429 million to be an 84,000% return. Gee, that's interesting. I don't quite understand how these numbers can work. So let's go back on up. I'll go all the way to the top. Come on, stupid. Hopefully I'm being smooth enough brained for you guys. I'm trying. And what I would like to see is the top average share price. Okay, 209 million per share for Berkshire Hathaway. 172 million per put on Amazon. 125 million per put on Alphabet and Booking Holdings and Chipotle and Intuitive, and they took 43 million in puts on BlackRock. How much did they make? 155,000% return. They made $41 billion on this. Look at this. They made $560 billion for 161,000% return on puts on Nvidia. Tesla, Lam Research, Adobe, Intuit. These are all real common companies. Let me get curious here. GameStop. Okay, there we are again. Gee, so I found their positioning that was in the original GME holdings. And if I come over here, right here, we can see 6/30, 2021 is the filing. 107,000 per share at a negative $740 million cost basis to give them $4.8 billion at a 97,811% return. All right. Now, I feel like I've gone through all of the institutional investorships. Let me close all of this shit and take you back to the GameStop portfolio. My favorite stock and only favorite on the entire market. And I'm going to sort this by percent returns. And we have this company that has 97.8 thousand% return, 49,000% return, 14,000, 4,000. Who are these top four players? BNP, Prelude, Peak 6, Bluefin. Interesting. How much did you pay for it? They paid 104. Okay, I like that. Well, this time let's sort this by puts. What I want to see is what, whoops, sorry. Resort it by puts. Now let's look at their actual percent returns. We got 300%, 300% really? On $9. Dude, they bought their puts for $9. Oh, I'm so jelly of you. Jeez. 1,111% return. And 1,900%. No, that's almost 2,000% return. Who owns those? Oh, look. Jane Street and Citadel. Huh. How much did you pay? $100 per put? On May? How are you only paying $100 per put in May? I don't know. Because these guys, 2 months later, are paying 20.1 thousand per put. That's the average share price. So when we go through this, it's kind of crazy. What do we have? Bluefin, Exorbitant. Let me go ahead and look for a thing. Okay, so we have Parallax. And we can see that their positioning in here gave them almost 1,000% return. Cost basis was low. They made $8 million off it. And that's, yeah, so that would actually justify that fucking return percentage. They paid $100 per call. Neat. What else you got? There's another Parallax. What do you got? 104. What's the date on this one? This is in May, May 14th. They positioned themselves for a 744% profit. Gee, I wonder why I put those into my DD. You guys don't always get to know all the facts, so I'll let you know all the facts. Can we find IFP on here? It says we can. IFP advisors. That's easy. They fucking 10%. I mean, that's more than I've made on my GameStop. And they paid a normal price. What time did you pay it? Oh, you paid a normal price for that. $200? That's a good buy-in. For 300 shares? Fuck yeah, it's a good buy-in. Let's look at their positioning. Huh. Nothing too drastically weird. Oh, okay. So they were able to actually make a killing on GameStop. Bunch of negatives. Loma. Ooh, okay, so there's a good position. Let's go over here. Now you guys know why I like to come over to the percent returns first. And we can see that was over in 6/16/30. So that was well long ago. We can come through and see the average share price coming up. Not a big deal. But what they did do was make this 1,000% plus return on GameStop. And that's for Class A board shares, common stock. And guess what? IFP Advisors was never on the board. So you have to wonder which institutional investor loaned these out. Damn, we can do that by looking at the institutional investors charts in this video. I've pretty much given you all of the unlocked Fintel on purpose. I don't have money. I paid for this strictly to do this for you guys. I mean that wholeheartedly. I love you guys. So let's go back over here. BNP Paribas, there's their $100,000 per share. Whoa, I saw another big one. Who paid big? CLC Clear Streets? Ooh, did you have a negatives? They don't have negatives. So let's do a thing. And actually, let's sort this by percentage return. Let's see who's taken the biggest loss on GameStop. As soon as my computer wants to not be a dumbass. Which it's being. There we go. So we'll start at the top. And you can see these 1000% returns. Yeah, I'll start at the top. That's what I will do. So that you guys can have the unlocked intel of all of this. Now I know that you guys can't exactly parlay this to what funds they belong to, but the idea is to show you how many people have made a killing on this while we have not, and we have wondered why it never rose on a functional manner ever. Who's got negatives in this fund? There's 0% returns. There we go. There's the negatives. These are the people that took losses. Let's see what the biggest losses are. Negative 1600% return, negative 1000% return, negative 250. So let's go from those four and under. Simplex, Goldman Sachs, JP Morgan, Simplex Trading. Damn, son. So if you're taking so many losses, let me look up these two funds' positionings into GameStop and the history of it. No wonder you took a loss, dumbass. You went against the apes. Look at your time frames. Return, negative 1000% return for something that cost $3 million and gave them negative $1 million. Good, you assholes. You fucking deserve it. Yeah, they exited before May. They entered after the squeeze and exited after May. Let's look at Saks. Oh, look, a pattern. That's a pattern, right? Look at that shit. Damn, they liked it then for some reason and didn't like it now. How much did they make? Damn, 3% return? What? That's pretty good, man. Especially because they did it before the squeeze. And it's, I can't explain. It's an equity class, but I can't look at the filing to show you what they did. Bam. And it's kind of, this is a big deal, guys. I'm trying to show you the institutions that are investing into certain funds to create extremely exorbitant amount of returns that should not exist in a free market. And the fact that the institutional investors share common investors that are then, go back to the beginning. This is GameStop Financials 101. I love you, Cohen. So let's do this. Percent return. BNP in August. Prelude, May. Peak 6, May. Bluefin, May. So let's sort this by the file date. How many people that were here are here? Damn. Do you see how many institutions have exited their positions since we had our rise? None of these guys, there's a couple that make sense why they exited, but none of these guys were hurt by it. Only we are. Look, there's Cohen. Let's see what Cohen did. Cohen and Company, because this has been thrown around Reddit a lot. People don't seem to like this guy. Same thing. Look at this put spread. You guys really feel comfortable with these guys? I say that's an interesting positioning. Why would they want in right here? Why would they take so many calls? We can come over here and see that they had a bunch, don't have a bunch. Had a bunch, don't have a bunch. I wonder where they're going if they're not having share prices or any kind of profit returns to show that it was sold. It was just handed off. Okay, well that's weird. Done. Get these guys out of here. Get these guys out of here. BNP, get these guys out of here. And this all ties into a thing. Do you know how I even learned to do this? I went over and I'm going to do Scion. And this blew me away. I'm going to go over because I didn't know how to prepare for the market crash that we all think is happening. But when I saw this chart, I said, this guy knew how to make money then. I would like to know how to keep my family safe through this now. So I went through this. And once again, he had... Damn, family's going crazy in the background. I didn't know what Tailored Brands was, and I believe in GameStop, so I went into Tailored Brands thinking I would be able to find a fund that I can believe in, you know? And so when I went through this, it wasn't hard to see that the company in the long run went up, down, and then just kind of took a shit, and okay, whatever. But when we went into this, there's a pattern here. And it's funny, because the positions that you guys see here, yeah, compare that to the L bond video and tell me how many are different and how they can be off of this. That part. We'll come over here. I love you guys. I mean that with all of my heart. And we can come over here. And then we can do a search for this word. And then I could show you this. You want to see the other ones? Oh, it took it. Let's go to the other ones. Okay, there's another one. You want to see the date on it? Okay, that's pretty fucking current. 06, 30 years. Okay. Ah, 05. Nice. Oh, 2007. Okay, that's interesting. Let's go ahead and look for another one that we knew. Oh, so they are still there. Okay, that's interesting. How many are there? Damn, 33? Okay, okay. Ooh, that's an interesting one. Didn't they change that? I don't know. Okay, let's keep going. And I'll try to keep the dates on the filing. That way you can see that they're all currently very active on an active current filing. And this scared the shit out of me. And I've been trying to produce the community with the idea that there is something in the background that is bigger than GameStop. And the people suppressing GameStop are directly involved with what we're looking at. Period. Period. These should not be here. These shouldn't be here. These shouldn't fucking be here. We could look at the other ones. And I went through all of these. That's just what I do. How else do I learn about what are the investors? You know? It just doesn't make sense. None of this made sense. Look, State Street. And they're either milking all of this to cover this debt, or they're milking all of this to cover this debt. And I have shown you guys the exact mechanic of why we never squoze. I have shown you the mechanic that 2008 was never covered. I've shown you the mechanic that nothing was ever paid for. And based on the fact that it never went away, right? And here, we can do it this way. I know exactly how we can do this here. I've tried to approach people with this information for a long time. It was one of these three. I'm not even going to waste my time. Just going to do the one that I know is in existence. So let's look at average share price. And I need to wait for this to load real quick. Okay, so that's pretty clear on who's involved. And it's the only one that's got a share price. So what I'll do is just go right back where I was. And let's open up. I would like to find the oldest one, honestly. That's an old one. Let's just open it. And we can see who has this. Okay. I don't know what all those are. Let's open one. Welcome to the DD, boys. 148. 242. Why are these in existence? And why is it that the institutional investors for our beloved stock have all of these in the background? I'm just going to do this quick. It doesn't even... Okay, now that I've shown that. I love you guys. Pretty sure that's it. Almost there.